So if I was to look at the previous candlesticks, this would have been Monday, Tuesday, Wednesday, Thursday, Friday. Look at how Friday had a very bearish engulfing candlestick, whereby it did engulf the previous two candlesticks, the bodies of the candlesticks, not the wick. Yeah. When I do analyze charts, I do pay more attention to the bodies of the candlesticks compared to the wicks here, because this one can be manipulated by brokers, but the bodies of the candlesticks cannot be manipulated. So whenever you're drawing support and resistance, it's somehow subjective, yeah. But the best thing for me to look at is the bodies, the opening and the closing prices. The high and the low can be manipulated. Don't get me wrong on that. So moving on to, before we even start analyzing assets, I want us to go over the economic calendar. And as I mentioned, tomorrow is going to be, today is the 16th of February 2025. Tomorrow is going to be market open. And looking at the economic calendar, tomorrow is going to be bank holidays for both Canada and the United States of America. So I do believe they're hosting President's Day or something. Yeah. So President's Day. Now, whenever there are bank holidays in a specific country, especially in a country like US, Canada, Japan, countries that have a lot of liquidity, remember banks are not open during that particular day. Okay. So speculators are going to have a much more impact in the financial markets compared to big banks and institutions. What am I trying to say? Whenever there's holidays, you might experience either high volatility or relatively low volatility. But one thing for certain is speculators are going to have a very big impact in the market. So Monday, tomorrow. Now, whenever you have a holiday, the markets are usually small. They are more slower, and they tend to respect price action more, so to say. Now, moving on to February the 18th, we are going to have cash rate for Australian dollar, whereby we are anticipating the RBA to lower their interest rates from 4.35% to 4.10. So this is like a 25 basis points, of which it's quite significant in the marketplace. Now, whenever you're anticipating lower interest rates, you anticipate a lower economy in terms of strength in general. So actual greater than forecast is usually greater for currency, but in this particular case, whenever you see the lowering of interest rates, basically they are advising or they're advocating citizens to go take up more loans, take up more credit. Now, this has an impact in the financial marketplace because banks tend to do well when there are higher interest rates. Okay. So when you get an economy that services, let's say, for example, 10% interest, then you're going to pay much more for an interest on a loan. Now, what this means is that there is going to be better money in the financial economy. But for the common people, for the common citizens, it's going to have a negative impact on them. So we shall anticipate a slow Australian dollar, slightly weaker, so to say, slightly dovish in this particular moment when the markets do open on Monday. Now at 10 a.m. we are going to have climate count change. This is the same as what the United States do have in terms of unemployment claims. So this is usually a weekly released data. So, changing the number of people claiming unemployment related benefits during the previous month. So, actual rate less than forecast is good for currency, because the lesser the people file for unemployment, the better the economy is going to be, because people are retaining jobs, and that's what we would want to see in an economy. Now, moving on, we are going to have Bank of England. Governor Bailey speaks. Has the same impact as Jerome Powell in the United States, but I don't like paying attention to him. But it's worth noting if you're looking at British pound pairs or the euro in that particular scenario. Now, Tuesday 4:30, we are going to have CPI for Canada. So at this particular moment, we are going to have it's going to be interesting looking at New York Open, of which it's more or less the same with Canada, on February the 18th, whereby at 4:30 we are anticipating the numbers to come out slightly higher, of which this is what we would want to see in an economy, because remember, low inflation means that there is no money moving. You want to find the right balance between low inflation and high inflation for a currency or for a particular country to say that yes, things are going well, and investors will want to look at that particular currency. Now Tuesday is going to have the high of the day when our guy Mr. Donald J. Trump is going to speak. But the thing is, we are going to have it as tentative. Now, whenever you have tentative at Forex Factory, this shows you that there is no specific time whereby he's going to deliver his speech. Yeah? So it can be any time. We'll want to keep an eye open on Tuesday. So Twitter is going to be one of the best assets on Tuesday. If you don't have Twitter installed on your devices, this is the time of which it's everyone is on Twitter right now. Now, moving on to Wednesday, New Zealand dollar, they are going to have their RB. So this is the Republic, the interest rates for the Reserve Bank of New Zealand, whereby we do anticipate. Now, these ones are going to cut interest rates by nearly 50 basis points, of which it's a lot, eh? So we are looking at economies, apart from the US, that are going to lower interest rates this coming week. Now, remember, whenever you're going to lower interest rates, you anticipate a weaker economy in general because it's going to push away investors into faster moving markets. Yeah, the higher the interest rates of a specific country, the more investors, outside investors, are going to come and invest in that particular country in terms of buying their treasury bills, the bonds, and etc. So at 4 a.m., so this is going to be the second news release. So on Tuesday we are going to wake up before 6:30. On Wednesday we are going to wake up before 4 a.m. in the morning to trade these. And we are going to have a press conference. So from anywhere 3:30 a.m. to 5 a.m., it's going to be an ideal time for us to be looking at NZD. We shall look at it in the trading view in just a moment. But apart from that, we are going to have, so the highlight, not the highlight, so to say, but we are going to have a FOMC meeting minutes at exactly 10 p.m. Now, this is minutes, okay? So this is a minutes of the previous meeting that the FOMC had, which doesn't have much of an impact in the financial markets. Now, moving on to Thursday, I think I'll get some sleep at 3:30 this day. I don't trade in employment claims, and this is the same as unemployment claims for the United States dollar. Thursday is going to be relatively quiet apart from unemployment claims on, but this one I usually don't pay a lot of focus for it because it's lagging data. Because if someone loses a job last week, for them to go broke, it's going to take a bit of time. So this one is a bit of lagging data, but it's worth noting it out in the financial markets. Now, Friday, moving on to Friday, it's going to be a plethora of activities for the euro, whereby we are going to have manufacturing, flash manufacturing PMI for France, and then 15 minutes later, we are going to have flash manufacturing PMI for Germany. Now, these are the two countries, the two top countries that affect the euro. So, Germany and France are the biggest shareholders in the euro currently at the moment. Now, it's going to be quite an activity on Friday. The markets, we will want to see how the markets are going to close, with a lot of activity in the financial marketplace at this particular point in time. Now, at 4:30, we are going to have retail sales for Canada. So last week we had retail sales for US. It came out slightly negative, and Canada and US are positively correlated, whereby we might anticipate also a negative number for the Canadian dollar. Now, no one is certain about this. This is just for educational purposes, but that's how the week is going to conclude. So the biggest takeaways for us right now, is to look at the Australian dollar, the New Zealand dollar, and of course the United States dollar. I'm not going to pay a lot of emphasis on the British pound currently at the moment. Now, before we go into the charts, I want us to look at the commitment of traders, so CFTC, whereby I this is a really good data to be looking at in terms of understanding how smart money are pushing their funds in the financial marketplace. So CFTC is a free website. You go to cftc.gov, meaning this is a government website. And then if I want to look at gold, I go to metals and others. So in this particular case, I want to look at disaggregated futures only. So institutions usually like to execute on futures because it's a much more safer, conducive environment in terms of the execution styles for them. So if I go to short format, it's going to pop up this table for me. Now, for those who are in the premium, I'll talk about this in I think it's supposed to be this week's lesson. But if you want to look at it, so with gold, you want to look at managed money. Now, looking at the data, you can see changes from February the 4th, 2025. So as of 4th, 2020, from 4th, 2025, February to 11th, here, 11th February 2025. So within a span of this one trading week, we saw 11,000 positions being offloaded from gold, which is a lot of money. Yeah, it is a lot of money. Considering this one contract of this is going to be equivalent to 100 troy ounces. So if you can just do the mathematics, this is quite significant amount of money, and there's only 100 traders in this category. But look at the short positions. So institutions offloaded long positions and they added short positions. What does this mean? If you buy an asset, you have to sell it to get money. So if you sell it, it loses value at that particular point in time, so to say, especially in the terms of where institutions are involved. This is what I'm trying to say. If institutions are buying, it reaches a point whereby they have to sell. Sindio? If they are looking for sellers, obviously they need to look for other buying players for them to fulfill their positions. But remember, institutions are the people who push the most amount of money in the financial markets. So if they sell, prices fall. If they buy, prices rise. Very simple. It is that simple. So if you're looking at CFTC, you can see that we had a massive rejection around this region here, and we can say that, okay, institutions might be continuing to sell their long positions that they have been having, because if you look at it from a weekly perspective, we have had a very good bull run on gold ever since December. Now, if institutions are buying, it does make sense for them to start covering their positions as early as now. Kenyan timing. Kenyan timing. Anyway, as I was saying, so moving on, I would want to see more bearish opportunities in when I'm looking at XAUSD. Why? Because as identified, we have this region here at 28.55 that has no wick to the bottom side, and this might act as a magnet for prices to come back to in the near future. So looking at it on the weekly perspective, we had a very big rejection around from 2000. It was 2,900 and something. So we had a rejection of nearly 625 pips, which is quite significant. This is like 2% of the total index value. Oh, poleni sana, I'm not sharing my screen. So sorry about that. Now, as I was trying to say, if you're following me up on Forex Factory, we had just looked at the data that we were supposed to look at. Now, looking at commitment of traders, this is the data I was showing in terms of we've had quite a significant amount of positions being offloaded from gold. So the amount of long positions have been offloaded, negative 11,000 compared to the amount of positions that have been added at 3,000. So if I was looking at this particular asset, I would anticipate more selling opportunities. If I go down to the 1 hour time frame, so this was the high that was created. I don't anticipate prices coming back down to this region. Highly do. I will just want to see a short-term retracement. If I was to pull a Fibonacci from this high to this low, I would want to see prices come back down up to this region here, which is very interesting for me. Somewhere around this region here. So if we do get the markets opening up to this region, I'll look for further selling opportunities to the downside. Now the most reasonable range that I have is 28.55, and I've just talked about it why. Or we can get the market opening and then aggressively moving back to this region down here. So looking at gold this week, I will be selling more. I'll have more selling opportunities compared to buying opportunities in gold, because I want to capitalize in this retracement that is going. It could be a retracement, or it could be that prices has exhausted itself from the highs that it has just created. Now, if you look at gold, in the past, whenever it makes this was once an all-time high, we have this massive rejection. Okay, so whenever you look at prices, especially gold, whenever it has an all-time high, there's a very high likelihood that prices will reject that region. Okay, so look at this. This was August 2020, the peak of COVID. We had a rejection, and moving forward, this was Russia Ukraine, if I'm not wrong, rejection. This was 2023, the where inflation started to peak around. This was inflation. So this was the peak of inflation, whereby inflation did hit the highest in the United States. We had a rejection. This was December 2023. I cannot remember these exactly. I cannot remember what this was. No, there was this time whereby there was this what do you call it? I can't remember the exact, but I remember there was something to do with AI that crashed. Was it an AI or a service? To a point whereby people could not board planes. It was so bad. It was so bad for the economy, and people were looking at it as very negatively. We had this peak, a massive retracement. Now we're moving on to 2024, whereby we were very bullish. Look at this. This was once an all-time high retracement, all-time high retracement, all-time high retracement. This also was an all-time high at one point, a retracement. So we can anticipate the same thing here. Hello. We can anticipate the same thing happening with the financial marketplace here, whereby we might have a rejection because prices in this particular sense are very inefficient. You can never have green candlesticks printing to the upper side. There has to be a certain balance between buying and selling. Sindio, there are two types of candlesticks here. We have a red candlestick and a green candlesticks. You'll never find a scenario whereby there's only green candlesticks like this. This is inefficiency in its own right. So we might start anticipating bearish candlesticks on gold moving forward, especially with what Trump is trying to do. There has to be a point whereby it will start working because, as we have all seen in the previous past, now it doesn't depict of future movements, but judging by what has happened in the past, we might anticipate the dollar is going to be slightly stronger because of all these things that Trump is trying to bring upon the people currently in this particular time. So if I was to move from the daily perspective to the H1, as I've mentioned, I would want to see prices moving back up to this region, to the between the 50% region and the 61.8% region for a further continuation to the downside. So I would want to see these. If I do have, my stop loss will be based according to the current price action, but my overall target is 2,855. And let's see how this month is going to close it out, because remember this is the second last week of this month. So this monthly candlestick has this week and next week in terms of trading. Okay, so if you look at it on a monthly perspective, the monthly perspective has started retracing also. You can see it has started retracing. So I'm anticipating for it to come back down, and actually 28.55 is a low hanging fruit. So meaning there's potential for prices to come significantly back down, and I'll tell you more about that as time goes by. So that is going to be my view on gold. Now moving on to New Zealand, let's start with AUD USD. So moving on to AUD USD, as anticipated, we are anticipating that news from Australia is going to come out negative, because lower interest rates technically are negative for an economy. Okay, so if I'm anticipating negative data from the Australian side of the world, I'm anticipating that we shall have more highs created when more lows created, sorry. I should anticipate more lows being created when I'm looking at AUDSD, because if the Australian dollar is going to be weaker, this means the United States dollar is going to be stronger. So if I'm looking at this price action here, I would want to see first of all prices come back to this region. I would want to see how prices will react because this is a region of liquidity for me, this is a region of interest for me. You can see how we had a pause in price action here. Now, what do I mean by this? Prices usually moves by impulses and correction, impulses and correction. So this is what an impulse looks like. It moves up, then a correction, up, then a correction. Okay, now the same can be said when prices are moving down, whereby it's moving low and then a correction, low, then a correction. So usually these points here are usually very crucial for us traders to be looking at. You see these regions here, these are regions that we traders will want to look at, because in the near future, if prices did spend a bit of time in this region, then it means in the near future there's a high likelihood that prices will come back to those particular points. What am I trying to say? This was last week. I'm looking at the H1 time frame. So this was not last week, but this was on Friday. Look at how prices opened. We had an impulse to the upper side, and then we had this region here, whereby for like 1, 2, 3, 4 hours, prices had no sense of direction. Okay, so in the near future, I would want to look at this region, ask myself if prices do break below this region. So if we do get a candlestick that closes, let me change the color. So if I do get a candlestick that forms in this particular manner, it will give me confidence to continue with the trend, because remember we are anticipating the Australian central bank to lower their interest rates. Now if they lower the interest rates, we are anticipating a weaker dollar. So prices might continue moving back to these lows that we have created. So if I was to have a low hanging fruit, I want to see prices coming back down to 0.62382, which is a good tradable range for me in this particular scenario. If I was to execute a sell stop around that region, this is like 100 pip movement, of which it's quite decent in terms when you're looking at it in terms of a currency point of view. So the Australian dollar, I would want to see prices moving further to the downside. So if I will just highlight this, now I'm going to leave this analysis here with you, so that at the end of the week we are going to look at what happened. Okay, so this is my outlook when I'm looking at Australian dollar versus the United States dollar, whereby I'm anticipating. So generally I'm going to be more bullish in terms of the dollar this coming week. So in terms of AUD USD, I'll want to see more selling opportunities. Now moving on to NZD USD, the same thing. Now if you look at, funny thing, if you look at AUD USD and GBP USD, the charts are almost similar. Okay, if I was to zoom in, so this is GBP USD, this is AUD USD. You can see the charts are almost similar. So if I was to look at British pound also, I would anticipate pricing coming back down to, let's say for example, I would want to see how prices will react to 1.23395, whereby if I do have a candlestick that comes back to this region, have a small term retracement, I'll look for selling opportunities back to the downside. So I would want to engage myself in this market the moment we break below these lows. And my stop loss will be based off the current price action, but my take profit is going to be around 1.23395, which is going to be around 212 pips, of which is a very good tradable range in terms when you're looking at GBP USD. Now going over to NZD USD, the same thing, whereby I'll anticipate the markets being bearish, because we're anticipating for New Zealand dollar, Australian dollar, for gold, we are anticipating it to be weaker. So there's a high likelihood that the dollar is going to be stronger this coming week and many weeks to come. We are very anticipating on that. So if I do get price action coming back down, the same region here, the same thing that we have identified with AUD USD. So if I was to have my markings, I want to see how prices will react to this region. Now remember, as traders, we want to react, okay? The reason why we do mark out these regions is you cannot start buying and selling at a random place. Eh? You need to wait for prices to come to regions of importance, regions of significance, that whereby, okay, there was a time whereby prices did stay here for quite some time. Meaning in the near future, if we do break below this region, it means that there's a high possibility prices will continue moving to the downside. Okay, so this is what I'm trying to say. So if we do get a candlestick that closes below this region, there's a high possibility we might have more bearish movements. But if you have a candlestick that tends to, if we have a candlestick that moves in this sort of manner, whereby it breaks these laws but has a rejection, then we might consider moving to bullish opportunities in the financial marketplace, whereby you're asking yourself, okay, could this be just a liquidity grab and prices might continue moving back to the upper side? But there is a very high possibility we might see a stronger dollar moving this week because of the commitment of traders. You can see how much money is being offloaded from gold currently at the moment and how many short positions are being added. And if you look at other assets like let's say if we were to go to Chicago Mercantile Exchange, focus on non-commercials. So look at this data. We can see that there are more positions being added on euro. So more positions being added on euro and very few short positions. So if institutions are buying, then this shows you that you need to be buying also, okay? So with the Chicago Mercantile Exchange, if I was to look at New Zealand dollar, so control F. So with the New Zealand dollar, for the non-commercial side of things, we have, wow, 60,000 short positions and more than 3,000 positions being added. So if institutions are selling New Zealand dollar, why do you need to be buying New Zealand dollar? Okay, so if they are selling New Zealand dollar, it means that prices will continue moving further to the downside, of which this is what I'm anticipating. I'm actually not going to be looking at buying opportunities. Actually, right out of the gate, when I wake up tomorrow and analyze the charts, I'll be going into selling opportunities on AUDUSD, New Zealand USD. Gold I'll like to monitor because it's very volatile. Always ingia to gold malpopote penye unataka, but I'll be looking to short everything that is not with the dollar. So meaning I'll want to buy everything that the dollar entails. Uh, Bitcoin also included. Now, if I was to move over to the volatility index, currently at the moment, the VIX is quite humble, meaning there's no spikes, there are no surprises that we might anticipate in the financial markets, but which is a good sign for us, technical and fundamental traders, because what this can show us is there's a very high likelihood that the markets are going to respect price action, especially we are in this region here. Now, VIX pay, does not respect price action, so to say, but this is just a tool for us to look at, whereby if the volatility index is higher, like let's say this particular day it was 22.51, this means that there's a 22% chance prices can go either way very quickly. But if you have volatility index at let's say 14.83, then this can show you that there's a 14% chance that prices can go either way very quickly, of which it's very hard for us to look at it in this particular moment. Now, I'm not going to look at WTI and Brent currently at the moment because those are so costly to trade nowadays. Yeah, trading oil is very, very costly. So that's going to be it for the analysis session, unless someone has an inquiry, but that is going to be it for the analysis. So anything that has the United States dollar to it, we want to look at it in a positive manner, unless Trump's meeting on Tuesday overshadows everything. Okay, if Trump's meeting on Tuesday is going to be negative, then what we've just talked about might be delayed a bit. But if the speech that Trump is going to give out on Tuesday is going to be positive for the dollar, then we anticipate that we are going to have more buying opportunities for the United States dollar. So that's going to be it for my analysis session. I'm going to give you a bit of few minutes for in case you do have any inquiry.